weeks is around the central bank. The Fed is set to cut in December, but also today is the day that quantitative tightening ends. And as you know, the Fed's been shrinking its balance sheet since April 2022. It's been a pretty big.
Tom Lee of Fundstrat remains bullish on stocks and crypto into year-end despite recent volatility. He cites major tailwinds, the end of quantitative tightening, expected Fed rate cuts in December, improved liquidity, seasonal strength, and potential performance chasing by fund managers. Lee views recent market declines, especially in AI and crypto, as healthy deleveraging resets. He believes the labor market is stable, inflation pressures are easing, and Fed cuts would be for the right reasons. While Bitcoin's year-end target now looks unlikely, he expects new crypto all-time highs by January, assuming equities recover and the Fed remains dovish.
Headwind for market liquidity. The last time we had an end to QT, quantitative tightening, was September 2019. And if you look back at that period, the markets really responded well. I think within 3 weeks rallied more than 17%. So I do think the timing of QT ending, which is now essentially QE starting, and the Fed, and at a time when November kind of was topsy-turvy, so I think people got cautious, but now have to performance chase, and then you have a really typically a seasonal tailwind. So I'm pretty bullish into December, even with maybe the first. I want that to worsen. But I think the inflation story has actually weakened a lot. So to me, the Fed would be cutting for the right reasons, which is as they look at the next 12 months, the tariff inflation impacts are fading, but there's risk on the job market. So, I mean, I think it's cutting for the right reason, which is, real rates are tightening if they don't cut.
Here's what concerned me about a couple of weeks ago, Tom, with the market's behavior, and that was watching all of the AI high flyers dip and drop, and pretty precipitously in some cases, because it looked like the Fed wasn't going to cut. That raised questions about what was happening in the private markets, and it made me start to wonder, okay, are we looking at a lot of business models that don't work if the Fed doesn't continue to cut rates? Are these the business models that are...
And the meme names and a lot of other names fell even more. So I think that position reset has been healthy, and I think many fund managers we talked to in November, in the midst of all that, kind of threw in the towel, thought the rest of the year was sort of a write-off. And now if December is strong, there's going to be a bit of performance chasing. And I think that's what you should typically expect in the final weeks of the year.
I thought it was when we saw Bitcoin sell off and sort of the high flyers sell off on the notion that Powell got hawkish at that one, whatever it was, that one meeting. And then Williams totally turned that around, and the Fed futures jumped, and it became clear they're definitely cutting again, and we got very little for that.
That's 7 weeks in the rearview mirror, so maybe in another week or two, I think crypto has fully washed out, and that's when it starts to participate.
Yeah, wipeout's a bad word. If you could pick another one next time, Tom.
Yeah.
We don't. You had very aggressive targets for the S&P and Bitcoin by the end of the year. I mean, it'd be crazy to hit the Bitcoin target, for example. I don't know what that was. But 7,000 on the S&P is still something you think that can happen this year?
Yeah, I mean, 7,000 is only 2% for S&P. From here, I think 5% or maybe even 10% is possible in December. So I think a 7,200, 7,300 is likely for S&P.
Ask you not to do that. You're giving me a talk.
But you're right. We were too optimistic about this happening by December. But I do think Bitcoin can make an all-time high by the end of January. So I don't think we should think the highs are in place for Bitcoin or Ethereum or crypto. So a lot of it's going to depend on equities recovering, which we expect it to, and that helps the animal spirits. And I think a new Fed chair will help. And we have, as Becky said, when people got worried about a hawkish Fed, that kind of hurts the discount models, the discounted cash flow models like AI models, but it hurts crypto models too. So if we have a dovish Fed, that's really a tailwind.
Tom, is there a point, though, Joe and I were talking about this in the last block, is there a point where...
Yeah, otherwise you'd be here, I was wondering. Yeah. It could be anywhere.
Looks pretty.
Yeah, it does. All right. Wow. no delay whatsoever. If you were like down the street on Zoom, there'd be a delay or something, but you're in Tokyo, that was great.
Is what's happening right now, right? Like, I think that same thing is happening right now. And so you're going to have some rallies by Bitcoin, absolutely. And I've said many times, like, you will likely have a rally back up to the 200-day moving average. I think that will happen. But that doesn't mean it has to happen today, right? Like, it could still be a few weeks away. Who knows exactly when it's going to happen? I could see a scenario where this bleed continues for a little bit longer, and then you have 3 months in a row, potentially, that are red. I mean, I hope December is green, in honesty. I mean, in all honesty, I hope December is green. I mean, it would be nice to have some relief here. But there does exist a scenario where you have these months to watch for, is that if this is like the 2019 bear market, you'll notice that it took about, how many weeks? About 6 months or so until we broke through that downtrend line. About 6 months. You could argue we haven't even established the downtrend line yet. I mean, who knows? Like, I mean, it's going to depend on whenever we get that move back up, hopefully before we go below these lows, because that's what happened last cycle, right? There was a low, Bitcoin dropped, got a counter trend rally, and then that's what ultimately set that sort of that macro lower high that then it eventually broke through in the next bull market. You can see it did that here as well, and then we got the recession, right? The pandemic-induced recession. Just finally accepted the bear market. I'm saying, like, I think that something like that could happen again, where investors finally accept a bear market. Now, there does exist a slight chance that Bitcoin could go back up to an all-time high, but it's not my base case. It's something to maybe just keep in the back of your mind of, like, okay, if you're going to hold anything in crypto, Bitcoin is a better hold than essentially everything else. If you look at, like, the weekly RSI, you can see that it has, in fact, broken down. And normally when it breaks down, that's confirmation of the bear market, right? Like, many times where you get these more sustained breakdowns, it's, the bear market is ended, right? So if we overlay here total assets held by the Federal Reserve, and you look here, you can see that Bitcoin topped out a few months before the balance sheet started to go up, right? So it topped in June. The balance sheet started to go up in September. So July, August, and then September. This time, what if Bitcoin just tops here October, and then you have November, December, and then you start noticing the balance sheet going up in January of 2026. And then therefore you have the same thing where Bitcoin tops 3 months or so before the balance sheet really starts to go up. Now, I've had a lot of people be like, well, what about Bitcoin dominance? Because, you're still bullish on Bitcoin dominance, and maybe you're staying bullish on it too long. And, which, while Bitcoin is not in a bull market, right? I mean, when all Bitcoin pairs were going up over here, Bitcoin was actually in a bear market. So you could have the same thing where, like, they drop down and then they start to go back up, but it just means that, you could be in a bear market. It just might be that alts are rallying against Bitcoin because they already got annihilated for the last 4 years. So, that they're just not dropping as much because they already dropped like 99.9% against the king. So that's kind of what I see happening right now. Like, I see, Bitcoin bouncing here and there on certain headlines about QE and lower interest rates and whatnot. But I think it's a patch of treasury maturities, like, won't actually finalize until potentially a few weeks from now. You might not see the balance sheet of the Fed go up right away. And that could be one of those moments to be like, oh, okay, maybe QE isn't going to save everyone else's altcoin. Not theirs, of course. Everyone else's. And then those people decide to capitulate, and then all Bitcoin pairs drop down. And then finally we get sort of a transition in the market cycle in 2026, where alts start to behave differently against Bitcoin because QT is clearly over and money printing has begun. But maybe it's not quite Bitcoin after the cycle peak, and compare, the current one to the last two. It's not like it looks that different, right? I mean, it looks kind of the same so far. If anything, it's doing better than the last two at this point in the bear market. So I just wanted to throw that your guys' way. Just something to think about with quantitative tightening. Again, trade the market you have, not the market you want, right? If we're in a bear market, we're in a bear market. Like, if you're an investor, you're going to experience multiple bear markets throughout your lifetime. Multiple bear markets. If anything, they just create opportunities, right? That's what they create. They create opportunities for those who are patient, I think that you could look at the QT narrative and the interest rate environment narrative and justify a similar type of bear market as the one we got in 2019. I think you can justify it. I think a lot of people are going to sit around and try to explain why it's different. But at the end of the day, the odds that we look back on 2025 and then going into 2026, the odds that we look back on it and we're like, yeah, it was just a bear market like all the bear markets, I think they're really high, you know? And I mean, yeah, there's a chance I'm wrong, and maybe Bitcoin does go to a new all-time high before